the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Yeah, Charles Tarbey joins us from Century 21 to talk about, a couple of the really big issues that are around. Charles, good evening to you.
Good evening, John.
Now, flammable cladding, and there's also the issue of construction of apartments and the building standards. So, there's a lot of apartment buildings around Australia which are covered in combustible cladding, and if you look through the real estate ads, there's a lot of really, really good apartments that are up for sale. Really nice-looking apartments in lovely complexes. You look at them and you think, good investments, good prices at the moment. You can understand people balking, though, can't you?
Yeah, you can, and they've had a really a bad run for the last couple of years, particularly with starting with the Opal Tower and now a few other apartments that are having construction or issues, along with the fact that the cladding has become an issue as well. I think what's happened with apartments, and this is just a personal view, I think quite often when properties are sold off the plan and they're pre-sold, the builders may have a tendency to downsize the quality a little bit because the property's already sold. And it's very hard to match something that you might see off the plan to something that's actually completed. So I think there's been a few issues in that area. I certainly think the oversupply has been an issue, and I do think that builders may have taken the easy road in some circumstances, because there are some tremendous looking apartment complexes at a very good value at the moment around the country.
I mean, what if there's a complex where you look at it and you say, look, there's flammable cladding there, which might give you might get it as a discount. You know that you can then do your research. You'd find out the strata committee's got plans. You try and factor in Victoria, you've got $600 million being allocated. There's pressure on the New South Wales government. So do you try and factor all of that into your consideration?
I think so. By the time you've purchased the property, certainly if it's off the plan, the strata hasn't been formed yet. So there's no structure in place for that. Of course, if it's a complex that's established and lived in.
If it's established, I'm guessing, now. Yeah.
Yes, you're going to have a lot better chance. Look, it's very organised. There's no doubt that the way in which the law runs in Australia and the way the strata committees are organised and the strata agents that deal with it, there's no doubt that we're a lot more organised in this country than other parts around the world. But the good thing for buyers is that they have a lot of choice. So if there's something makes them nervous, I'm not talking about the general residential market, because that's very, very tight when it comes to stock.
Yes.
But when it comes to apartments, people have a lot of choice. So they've got the opportunity now to really dig deep, have a good close look, take their time and not rush into something, which is what they did going back 3 or 4 or 5 years ago when they were buying off the plan.
Right. So as of right now, like I keep an eye on this, and I know that, as you say, you go around some of the new areas of Brisbane that have been developed in recent years. You go around the South Bank area, particularly around Docklands in Melbourne, and you look through the Waterloo area of Sydney and where there's apartments gone up everywhere. Your choice is quite wide and quite broad. It's a real buyer's market, isn't it?
It's tremendous for the first home buyer, particularly, but the one big issue that the first home buyer is facing is the opposite side of that, is getting the money. We go back to responsible lending and the Royal Commission into banking. Interest rates might have been 3.5% or 4%, but unless you can afford to repay that loan at 7 or 7.5% or even more, you were never going to get approved. And this responsible lending has caused a lot of the slowdown in the marketplace, along with the Royal Commission. So even today, I'm speaking to somebody who could get a 3.5% housing loan, but the problem is they're being qualified at 5.5%. And if they can't afford 5.5%, they're stuck. And there are lots of people out there, particularly renters, that could buy a property now, but because of the way in which lending has turned, it's becoming difficult for them to borrow.
I mean, the truth is, you and I know you're probably better off budgeting for 5.5%, and then you get the 3.5%, you pay the 5.5%, and you're getting ahead.
Yes,
if you can do it.
If you can do it, but the problem is you don't even get a look in. Even if you can afford 3.5%, and sometimes the purchase of a property is becoming cheaper than rent, and so it really does make it difficult for the first home buyer to get started. Mind you, with stock levels, as I mentioned before, certainly in the residential housing area, is pretty tough as well. And so right now you've got a chance to buy a good quality apartment at a good price with low interest rates, but you're not going to get that opportunity because of the responsible lending issues right now.
Yeah, I saw these clearance rates today, the Sydney in particular, but right across the country, starting to tick up.
I've been watching it, obviously, every week I look closely at it, but to this last 4 or 5 weeks, we've been watching it move well beyond where it should be, 81.5% in Sydney, albeit it was over 303 properties. But this time last year, there were 407 properties and the clearance rate was 55.2. So there's certainly a change, even with Melbourne. Melbourne was really dragging the chain, and in the last 3 weeks, it's been in the 70s. And again, 416 auctions in Melbourne last weekend as opposed to 613 last year. It's not a major drop, but the clearance percentages have been quite extraordinary. And I'm watching all of a sudden lots of buyers out there, lots of properties being sold, but the issue is stock levels, and stock levels are down 3.97% over this time last year. So if somebody does want to sell, they can't find something to buy. So we're sort of stuck in that cycle again. It's an incredibly interesting time right now.
Yeah, I don't know what language to use, because if I was reporting on this earlier tonight, and you find yourself checking yourself when you say, oh, this is good news because, the market seems to be on the move. Well, is it necessarily good news for people who want to get into the market?
Correct, and that is a big issue. And again, I was speaking to some clients today about selling their home, and they said, we'd love to, but we just can't find something to buy. And I don't know how it's going to start, but the good thing about it at least is this constant talk over the last few years of the market crashing by 50, 60%, that always concerns me. And the people that were talking in that language should step up and apologise, because there are a lot of people out there over a few years, going back 4 or 5 or 6 years ago, that sold their properties because they were told the crash was coming.
Yep. And
of course, they've lost a significant amount of equity. But where are these people? When the market doesn't drop the way it is, they go all quiet, and that concerns me.
All right, now I noticed I guess they've come up with the numbers of internal migration, so where people are moving within Australia. And the Gold Coast, followed by the Sunshine Coast, is where people are heading.
Wow, that's fascinating. The Sunshine Coast has been a marketplace that we've talked about as a strong area for an incredibly long time, mainly because, as opposed to the Gold Coast, it has a higher owner-occupier rate, and it doesn't have the massive apartment complexes, 30, 40, 50-storey type buildings. It's a lot different. The airport's right in the middle of it. You're not far from Noosa. You've got, obviously, the canal living and so on. But the Gold Coast was, of course, goes all the way back to the 80s when Japanese investors came in, and it was overpriced for a very, very long time. And so it sat for so long, nobody wanted to buy in there, and it was incredibly difficult to sell. It's come of age now because it's caught up to the rest of the market. But I still think that the Sunshine Coast is one of the better areas, followed by the Gold Coast when you look at the Queensland market.
I'm looking here, Greater Geelong's doing pretty well as well, with a lot of people shifting there.
Strong area, and these areas improve dramatically when infrastructure improves. And so if you look at the different freeways, the transport systems that go out to these areas, you go all the way around the Bay in Melbourne, all the way around through Point Cook, all the way down that line down to Geelong. That's all developed, and they're just like totally new areas that people wouldn't have thought would actually be developed to the extent that they have been. And so, again, a lot of population, a lot of people want to live in Australia. You look at Tasmania. Tasmania has been booming now for the last few years and still is. I mean, rents in Tasmania since 2015, since I've been keeping charts, have increased by 42.18%. And in the same time, Sydney has gone back 0.06%.
Which I guess is an argument for investing. As always, very, very interesting. Charles Tarbey, thank you so much for that.
Thank you, John.
The informed investor there, Charles Tarbey from Century 21. Let's go to Robert, who's called in from Brisbane. Hello, Robert.
G'day, John. How are you, mate?
Not bad. Now, you got an experience in terms of a home loan and the way the banks are making it difficult?
Oh, well, I'd have to say it's hard not to be cynical. We went for a home loan. We bought a new property. We had an existing property which we've been renting, bought a new home, had to do some renovations to it, so qualified for the home loan on 8%, no problem. As always, you're under budget when you're doing renovations, and so we thought we'll go back to the bank and we'll see if we can just get a little amount, only talking maybe 20 grand, topped up, said, sorry, you don't qualify. However, oh, look at this, you're pre-approved for a $60,000 personal loan at 17%.
What? Okay, so when you said the 8%, that's 8%, that's deposit, is that right?
No. So we've been pre-approved on an interest rate at 8%.
Okay.
So if the interest rate goes to 8%, we were pre-approved.
Oh, yes, that's right. I understand. Yes, I understand. Yep.
Right?
Yep.
So we went back in to say, well, look, we need to top up because we don't want to use all the cash flow on renovations. And they said, I'm sorry, we can't give you any more based on this formula. But however, you do qualify for a pre-approved $7,000 personal loan.
You can get that. You can do it on a credit card, can't you, for less than that?
It's my point.
Oh, well, that's the old days of cocktail loans, Robert. That's terrible. What have you done in the end? What have you decided to do?
Used our cash flow.
Yeah, there you go. All right, and you're obviously got an attitude towards them which isn't all that flash. Thank you for that. 131873 is the number. See, that goes to what Charles was saying earlier. Banks are being difficult. So what they've done there, they've been approved for a loan and they are capable of meeting an 8% interest rate. So that's what it was, pre-approved for 8%. So you can obviously get a much lower rate, but they're actually pre-approved. If interest rates go to 8%, they'll be okay. They can deal with it. They've got a cash flow there, but they've said to them, no, we can't give you the extra 20 grand for your renovations at your home mortgage rate, but we're going to give you a 17% loan. And again, those of you who are old enough to remember this, in the old days, they'd have cocktail loans. So they wouldn't lend you the whole lot. They'd lend you a proportion of the loan. Then they'd send you off to the bank-owned finance company that'd try and hit you with a huge interest rate for the rest of it. And they called those cocktail loans, and they were ripping people off